Welcome back to Under Pressure. Today we have with us once again Drake Vant Hul of Performance Financial. We are very happy to have you join us again for a second episode, Drake. Thank you very much.
Dude, it's an honor to be here, and this is why I got into business, man. It's doing things like that, like this, that get out and help people. That's what's fun to me. So, and I can talk a little bit all day too. So I never hate hearing my own voice a little bit.
Oh yeah. Yeah, I know you can talk all day. We actually had a fantastic episode last time that I actually titled "Accounting and Pressure Washing," and that episode was fantastic. If you want to get a little bit of the background of Drake and how to handle basic accounting in pressure washing, get a basic idea, go check out his last episode. That should be up on our channel and all platforms. But today, Drake, we are going to talk about tax time. Is that right? And how to prepare?
Yes, sir. And I think it's relevant because a lot of us are feeling a little bit of the hangover of tax season right now. I know specifically I am, but I know you guys that are doing pressure washing too are as well. Things like, well, we just had to maybe make our final tax payments, or we're looking at what our quarterly estimates are coming up throughout the year, or maybe it just went horribly and we weren't ready for it, and whatever that is, right? We're seeing a little bit of that hangover right now, and now as we're really starting to get busy, here's another thing we can do to make sure we're more prepared for next year. So we're going to chat a little bit about that and what that looks like today. And yeah, feel free to, if you guys have questions, feel free to reach out some later time too, or we can answer other questions for you as well. So.
I'm sure there will be a lot of questions that are brought up from this episode as we're going to talk about what Drake saw this year, how to prepare your taxes for next year, and then Drake does have a special offer that we will bring up right after the commercial break. But Drake, if someone listens to this episode and wants to get in touch with you for some tax help, what's the best way for them to reach out to you?
Yeah, they can go to our website, performancefinancialllc.com. They can go to our Facebook or our Instagram page at Performance Financial. They can reach out to me personally at my personal Facebook page, Drake Vant Hul. Pretty active in a lot of the pressure washing groups. So, and a lot of times what I'll see too is I'll see if guys, for whatever reason, Facebook's algorithm is fantastic, and I see the posts where they ask tax questions or they ask about my accountant or things like that. So if you guys are posting in those groups, likely I'll reach out and provide some insight on those as well. But yeah, feel free to reach out to me on any of those social media platforms or through our website. We have a contact form as well, and we can kind of help you walk through. Everybody's tax situation is different, so we're going to be talking in generalities today because it all depends really on your personal situation, but that's really one of the things that we try to work with is to maximize it personally for you, because what works for somebody else might not be the best thing for you.
Absolutely. And as anyone listening can tell, with your involvement in Facebook and your willingness to come on again to talk about this, Drake clearly wants to help pressure washers with their accounting. And so take him up on that offer. Reach out to Drake if you have any questions.
Yep.
He'd love to help. So, Drake, what did you see this year when it came to tax time for pressure washers?
Yeah, so there's a lot of new guys in the industry, which is awesome for the industry. We're seeing good growth. Some people are like, man, there's new competition. You hear these stories about the $99 guy. What I saw is opportunity for people that can understand the finances and can be great at customer support to absolutely excel in the business. Now, the first part of that is understanding their numbers, right? So there's the big players in the industry. There's this flood of new players in the industry. And what does that mean for you if you are one of the new guys? Well, a lot of the older guys aren't adapting to the new technology. So there's opportunity in the industry for you guys to take advantage of some of that or to get a leg up on them, especially if they're older and aren't as good with technology. If you can harness the power of technology, you can quickly get a decent foothold inside of the industry, especially in your area. The other side of it is understanding your numbers. With the competitive environment, you're going to have to start putting more focus and effort into what is the profitability of this business. You see guys out there, everybody talks about the $99 guy. That's not the guy you should be worried about because he's probably not going to be around in a year. Coming fall, let's have some cash ready and we'll buy all the $99 guys' equipment at pennies on the dollar. right? So one thing that I saw this year, and for guys that are really wanting to take that next step and get better in their business, is just being prepared from a tax perspective. And that comes in a few different ways. First off, it's having the cash to actually pay for taxes, right? Hugely important. And I say that because taxes, you pay them typically in April, but as a business owner, you're typically making quarterly estimates as well. So a lot of these guys did not make quarterly estimates. And so now what they're having to do is once tax time rolls around, we have to make a big payment in April, plus pay a little bit of negligible interest, but a big payment typically to pay off our entire balance in April. And guess what? Who's all getting busy in April and May? Well, all the pressure washers. And so now we've taken a huge amount of money out of their business, and now that's going in to pay the IRS what we're getting zero return on. And now our operations suffer. Now we're not spending money on marketing. We're not able to go get a new skid because we're building out a second unit because we have some good growth coming up because we just don't have the access to capital for it. We're not hiring soon enough because we need some money in the bank before we feel comfortable hiring. All of these things can be avoided with just a little bit of planning and a little bit of foresight. But a lot of these guys that just started, they started last summer. They made some decent money. They didn't make any money from December through January, burned through their cash reserves, now have to pay a tax bill. Oh, and you pay April 18th this year. Oh, that's also when your first quarter estimates due. So it's like a double whammy when you're getting going with your business. And so cash is so incredibly important, and a lot of guys aren't seeing the importance of that. And so now they're paying the price for it and not able to really, have a well-oiled machine come the beginning of the year when they can really go out and start making some good money. So that was the biggest thing that I saw kind of coming into the start of this year with some of these newer guys.
Yeah, and so what's the best way to, now starting this year, make sure that not only can you combat that, but set yourself up the best for years moving forward?
Yeah, so one thing, and this is talked about a lot as well, is how do you pay estimates, or what the heck are they, or does the business pay it, do I pay it? For 99% of you guys, and again, I'd like to talk a little bit in generalities here because there might be an odd duck out there. For 99% of you, you are going to personally pay your quarterly estimates. Now, let's take a step back. What the heck are quarterly estimates? Think about when you were an employee, or if you ever worked a job where you got a W-2 or they paid you, bi-weekly, whatever it is. They withhold maybe some federal income tax for you. They withhold maybe some state, and they withhold Medicare and Social Security. So when you work, 5 hours and make $20 an hour, it's weird how your paycheck isn't $100. It's more like 70 some dollars. The reason is they're withholding some of those taxes. When you own your own business or when you're self-employed, you are responsible for paying in those taxes, right? The IRS says, hey, they try to operate a bit like a business. They're not a very good one, but they try to. And they say, hey, we don't want all of our money coming in April. We want to see it quarterly so that we can make sure we're meeting our payroll obligations and, all the things that function for their organization. So they want their money evenly throughout the year. And if you don't do that, they're going to charge you a fee. They're going to charge you some interest and some underpayment penalties for not paying them throughout the year. All an estimated tax is, though, is just a voucher that you fill out. You say, this is my name, this is my Social Security number, here's the dollar amount I'm going to pay you, and you mail that to the IRS or you fill it out on their website. And it basically is saying, hey, here's a quarter, or what we're expecting a quarter of our overall tax liability to be. And we're just giving it to you each quarter of the year. Typically what you'll see is if you work with an accountant, they should include those vouchers with your tax return. They'll say like estimate 1, estimate 2, and they'll have your information printed on them. They'll have the dollar amount, and you just need to write that check. If you can do that, it doesn't fully pay what your potential liability is for next year, but it makes it so that you don't owe any penalties or interest for underpayment. The IRS got a complicated formula for how to calculate that. Don't worry about that, just pay those estimates. And then when you come to April or March of next year, now all of a sudden you've paid in potentially a big chunk of what you owe, and now you're not having to pull out a bunch of cash come this time of year when you really need it to operate inside of your business. So the majority of you will pay for those estimates personally. Now, you don't need to have personal funds set aside. You could use the business to write a check for you on a quarterly basis to pay those estimates, and you should be doing that. The profits from the business should be a distribution to help you pay for your tax liability. So that would be where people might sometimes get confused as to, is the business paying for it or am I paying for it? Ultimately, you're paying for it. It might just come out of the business's checking account, and then we call that a distribution to you. So that's the nitty-gritty basics of estimated taxes, but they will help you substantially, not having to take out a bunch of money come this time next year, and really help you get set up on a good cash flow footprint. Like I said earlier, though, the downside of that is if you having to start that and you didn't do that for a year, you're kind of getting double hit from it, because you're paying your liability in April, and now you're having to make your first quarter estimate that same day, which is a quarter of what you just paid in. So if you owe $20,000 in tax, now you got to pay a quarter of that in the same day. It's like writing a check for $25,000, and then another $5,000 check in June, September, and December, January time. So it sucks that first year when you haven't been doing it correctly, but once you can get in that rhythm, it's way easier for you and helps you out substantially from a cash flow perspective.
So we saved well over $250K.
Just this quarter, we have saved about $30,000 in credit card fees.
Probably over $1,000 a month at least.
Over $150,000 this year alone.
$180,000 the first year we worked with them, and it's growing every single year.
Thank you, Pair Payments.
Thank you, Pear.
I would recommend them to anyone.
Yeah, just wish I would have done it sooner.
Absolutely. So if anyone's hearing like the estimated taxes and the cash flow, and they're a little bit confused, or it's a new guy, I'm sure you deal with a lot of new guys who come in, and there are a lot of terms they're confused with. As I want to make this episode kind of like a, hey, if you haven't done this before and you need to know how to file your taxes or how to even start thinking about it, are there any terms that you see a lot that a lot of the new guys would love help understanding, and that you could bring some definitions to the table, just like you did with
Yeah, so one of the big ones is people talk about income. And income can be kind of one of those terms that is kind of flippant. You hear, what's your income for the year? And somebody will give you a sales number, and they'll say, well, you did 200,000 in income. It's like, that's not what income is, but I understand kind of your point. So I want to break these out a little bit. So income, really from an accountant standpoint, when you're thinking about financial statements, this is what people think of as net income, or the profit of your business. So this is sales minus expenses equals your income, your net income, kind of interchangeable words there, profit. Sales are, you go do a pressure washing job and you charge them $500, that is your sale. That's not your income, that's your sale. Another phrase people might say would be like cost of goods sold. This would be, and you're not selling a good per se, but it's kind of the category of these expenses. Your cost of goods sold is the things that are mandatory that you need to have to perform that job. So things that would go in there would be like your insurance, your supplies to perform that job, your depreciation of your equipment, your fuel to drive there. Now, what's tough about this is when we look at like fuel and things like that, we don't go, well, how much money did this job make? It's tough because are you calculating how many gallons you drove from job A to job B in that day, and then factoring in what the average rate of gas is? No, nobody's doing that. The only thing that we maybe track well enough from that perspective is the labor, right? So the labor is something we can tie specifically to a job. And I've actually made, if you guys are interested in this and I've made a spreadsheet that will kind of help you calculate and figure out some of this profitability. So reach out to Jake or myself and we can get you a copy of that. But essentially what we've tried to do is say, if this is your labor costs, we can come up with a number that says these are the other costs that make that up, and attribute that to your job so you can see if it's profitable or not. But again, so that's kind of your cost of goods sold. Those are the mission critical. Then the other thing you'll hear is maybe general and administrative, or some people call them overhead costs. These would be things like your owner's compensation, advertising, maybe a rent for an office building, your general office supplies, things that aren't mission critical to performing a job, but they help with the overall structure of the organization. So we typically don't attribute those costs to specific jobs because those are costs that you have pretty good control over, right? You can choose, hey, how much am I going to spend in advertising? But you can't necessarily choose on a specific job how much SH you're going to use, right? It's kind of a, you need to have this to perform that job, whereas you may not need the advertising to perform a job. People can argue with me on that, and that's fine. But that's the point of that is those aren't really job-specific costs.
Absolutely, that makes sense. So, other than that, are there any terms that could use some clarification, you believe?
Yeah, so there's a lot of questions on depreciation. I'll kind of walk through my thought process on some of that. So there's a constant discussion of should we take depreciation on our vehicles and our equipment, or should we take mileage on our truck when we're driving to jobs and things like that. So the difference is when we're talking depreciation, this is a tax term, and really it's an accounting term. But basically what it means is we're trying to always match our revenue and our expenses. So when you buy a new truck, it might cost you $20,000, $30,000, whatever it is, right? New to you truck, maybe not brand new. But let's say it costs $20,000 for simple math. We can choose from a tax perspective to write that vehicle off over 5 years or in the year that we purchase it. So if we write it off over 5 years, we get $4,000 of cost each year. If we write it all off in 1 year and we paid cash for it, it's just like we created that expense this year. On the mileage side, this is a set rate by the IRS, and the IRS kind of looks at global U.S. data and says, okay, this is the average price for gas, average price for oil changes, and they just create a set number. And where a lot of guys go wrong is they never track their mileage throughout the year. So one tip that I have for you to tracking your mileage is look at your odometer at the beginning of the year, look at your odometer at the end of the year. That'll tell you how many miles you drove, and then we'll apply typically a percentage rate to it. The reason I say it that way is that's not the perfect by-the-book way to do it, but I have met no one that uses some app that accurately clocks in and out every time they're driving around. It just doesn't happen.
I've tried
So if we're going to take it just, nobody does it. And so this is a way I've found to like make it simpler. Now, back to what's the right one to choose. This is one of the very, very few places where we have an opportunity post-January or post-December 31st where we can edit your tax return. If it's your first year setting up your business, or if it's the first time we've ever taken depreciation or mileage, this is the one time where we can go, okay, we can make a decision after year end on what we're going to choose. If you take depreciation, you are stuck with that until you get a new vehicle. If you take mileage, you are stuck with that until you get a new vehicle. And if you have a fleet with over 5 vehicles, you have to take depreciation. Where mileage makes sense is if you're driving more of a fuel-efficient vehicle, maybe getting north of 20 miles per gallon, and it's probably less than $20,000 in cost. Because the depreciation factor that the IRS sets is typically on a newer vehicle, probably in that $20,000 to $30,000 amount, but it's including cars, which have better mileage. So the gas cost on that's a little bit down. If you're pulling heavy stuff, depreciation typically makes more sense. So the other side of that is if you have a vehicle that's over $30,000, it typically makes sense to depreciate it. It's that $20,000 to $30,000 kind of that's where we have some play. But if you're pulling, if you're doing a 2500 that's sipping diesel and you're getting 12 miles to the gallon because you're pulling a heavy trailer, it almost is a no-brainer because that mileage rate will just be too low for what it actually costs you to operate that vehicle. So that's where we still have a choice come tax time, but the majority of you guys are probably going to be utilizing depreciation because, one, it gives us a really good tax advantage in that year to write off a lot of costs, or it's more accurate over the course of the life of that vehicle. Because when you take mileage, you can't deduct repairs. You can't deduct oil changes. You can't deduct new tires. You can't deduct any fuel costs that are related to driving that vehicle. When you take depreciation, you get the cost of the vehicle plus all of those other expenses, and that typically works out to be a higher expense. Now, we don't like lots of expenses, but on the tax return we do.
Oh yeah. Oh yeah. And so anyone listening to this and thinking, wow, there are a lot of variables that I have to consider when I'm trying to optimize my tax situation, that's why you need to reach out to a professional who knows your industry, just like Drake in Performance Financial.
Yep. One thing we saw this year a lot is there's a lot of firms out there that are really dealing with, they're trying to only stay with clients that are really large, that they can do a lot of billings with on an annual basis. And then there's the H&R blocks. So there's this weird middle where there's not good advice. And typically when you're seeing one of those firms that's kind of in the middle, they charge a lot, or they have so many clients that they have no back and forth with you. One of the things we really try to focus on, and one of the reasons we started Performance Financial, is for that medium to smaller size client, to give them good advice, because most of them are not out there getting it. If you go to an H&R block to file your tax return, they're going to just take whatever information that you gave them, and they're not going to ask you any questions. And so there's a lot of missed opportunity because you don't know what you don't know. And so one of the things I've seen a lot this year is a lot of clients didn't include their cell phone costs. A lot of people pay for that out of their personal bank account with their wife, and they got their kid on it. If you didn't have a cell phone, you would go buy one with your business because you need it to operate your business. There's no doubt about that. So for me, that was always one of my questions. What did you pay for cell phones? I know you paid it personally. Let's make sure we add that onto your tax return, because we're probably missing that. And so that helps give us some additional expenses. And just having somebody that you can bounce ideas off, or say, hey, we're doing this wrong. I did have a couple clients actually that they're taxed on their personal return, which means you cannot take a salary. Well, the owner, ADP or whatever payroll system they were working with, never told them that the owner couldn't be taking a salary. So they just heard, yep, we need to take a salary. And so they set it up with a payroll company and started taking a salary. Well, you're not allowed to do that. And so now we're either having to kind of push that under the table, hope we don't get caught, or having to go back and amend a bunch of W-2s and tax return information. But that could have been a simple, hey, I'm going to ask my accountant, can I do this before I do it? And it would have saved us a bunch of time or a bunch of potential exposure and risk. So little things like that can be very beneficial, but making those mistakes and then coming back can be costly to fix some of those things.
It makes sense. Absolutely. So this is a great opportunity to take a moment to hear a word from our sponsor, Pair Payments, and we will be right back.
You certainly can't afford to give profit away for no reason. But what if I told you credit card processors may be overcharging you and robbing you of profits you've worked hard to earn? It's time to put an end to being overcharged for payment processing. It's time to take back your profits. That's why we've put together a free report, How to Avoid Being Overcharged by Your Payment Processor. Head over to takebackyourprofits.com, download the report, and put an end to being overcharged for credit card processing. You've worked hard for your sales, and you deserve to keep it. What are you waiting for? Go to takebackyourprofits.com and download your report today.
All right, and we are back with Drake Vant Hul, Performance Financial, who today, for our Under Pressure audience, has a special offer. Drake, what is that special offer?
Yeah, so we've been seeing a lot of guys that don't have good financials, and there's a lot of guys that are really getting going, and this is the next piece that they need to really help inside their business. So we help clients all the time with their bookkeeping and add in an advisory inside of that. So for anybody listening, if they reach out, we'll give that first setup of all your QuickBooks Online for free. This is recording everything through the beginning of the year, making sure all your accounts are reconciled, and then giving you accurate financials through April if you guys sign up now with our bookkeeping packages. And big benefit for this is it takes away some of these worries from you, but it also gives you information to make decisions with inside of your business, which can be hugely important for you guys as you continue on and build your business, especially if you're looking to grow.
Oh, absolutely. Every conference or event or mastermind group you go to, you hear over and over again that you need to know your numbers so that you can make data-driven decisions. And it's a great way to get a head start on that and actually, get all the right numbers, right?
Yep. Yeah, the other big thing too is, if you're new, you understand the time that it took you going into this past year to get all your taxes ready. if you have good financial statements that you've been making good decisions with for the past, 8 months, now your tax return becomes easy. It's, hey, we already know what our numbers are. We already kind of know what to expect. Let's dump those into the return, get this thing over as fast as possible so it doesn't hang over us. And now it's done. We're past it, and we can focus on other things instead of having to take a week and go through old Amazon receipts and looking at your checking account and going, what the heck was this for back in February? All of that's done and taken care of for you, so we can get your tax return done in February or March and not have to worry about when April 15th comes around.
All right, so Drake, let's get into how to prepare for next year and how you can avoid some of the pitfalls you've been seeing this year.
Yeah, so one, just talking about again, good financials are highly important to be prepared. The other thing a lot of my clients really enjoy is a tax planning meeting, typically in the fall. And what that kind of looks like is this is an hour sit down and let's hash out a few different things. One, let's just start with, if we do nothing, this is what we're going to owe, right? So I always tell everybody the worst part about taxes is just not knowing. Yeah. Taxes are just scary. They're this big monster that's hiding out there. The IRS is the best fearmonger that's ever existed. And they push this fear into you because you have no idea what it's going to be, and you're putting it up to some accountant who, what do they know, and are they doing everything? Are they doing the best for us, right? So there's all these fears, right? So first thing, let's just sit down and, hey, by April 15th, you need to make an X amount of dollar payment. This is what you're going to owe. If we project out the rest of the year is maybe break even or whatever it is, we'll do a little projecting and say, okay, this is what the dollar amount is. Then what we'll do is we'll say, okay, you need a new truck, right? Your other one's starting to rust out, or you need to expand the fleet. You're going to buy one in March anyways. Let's buy it in December, right? Let's take that write-off this year. It's going to save you this amount of dollars in taxes. Let's do a couple other planning opportunities, right? Can we, buy some extra chemical or prepay insurance or different planning strategies? These are something that we can do. But if January 1st rolls around, it's over. So that's where I like to have these discussions end of October, early November, so we have 2 months, 8 weeks worth of time to start actually putting some of these wheels in place. Because if we do this in the middle of December and we need to go buy a new truck, I think all you guys understand what the vehicle market is out there right now. Probably aren't going to take ownership of it before the 31st, and so we can't write it off then. So some of these types of things can really be where we provide a ton of value and put together really good plans so that we can save a bunch on taxes, or at least so we know where we're sitting, right? Because we're trying to avoid that fear of how much are we going to freaking owe. And that's one of the huge pieces that can really help just give some clarity to the business overall.
Yeah, absolutely. And I think it does go to show as well, like you just said, there's so many variables here on timing and all that it really matters that you talk to someone who knows your industry, right? Because something you just said before is like, you don't know if the accountant is doing it the best way for your business, basically, right?
Right.
So that to
right.
me has that
yeah,
importance.
And a lot of times, if they don't have industry experience, they might not be able to go, hey, can you go buy 1,000 gallons of SH? Can you? Well, they don't even know what product you use. They just prep your tax return. Is that even practical to do? Do you need certain licenses to actually be able to store that level if we did some planning that way, right? Or maybe we just simply can't get that much in a 2 weeks time period. It's going to take us, a month and a half of buying to buy that level of material. So understanding somebody that understands your industry and working with that is hugely beneficial because they can give you some actual proactive advice. And what I've been telling a lot of my clients is, if you guys aren't thinking ahead for your businesses, you are going to fall behind, 100%. The way the world is moving, and we can talk about blockchain, we can talk about crypto. I don't really care about any of that stuff, but what it's doing is it's changing the way we do business, right? In 5 to 10 years, what you're going to have is the accounting side is not going to be that important. You're going to have things like when you go to a supplier to get chemical and the blockchain works, it's going to tie that sale of their chemical to your expense. And so the accounting will be an afterthought because all of the grand transactions will be recorded on one ledger, and we'll just know through key tags that this is their sale and this is your expense, and those will match up for forever. So the accounting is nothing then. So then what we need to be doing is having forethought and utilizing those numbers to help us make decisions. And if you're not doing that, you're going to be falling behind in the next 5 to 10 years. And now you have time to build out that muscle and to get ready for what that's going to mean. Because we have things already, like even a QuickBooks, if you're a very basic client or have very basic financials, QuickBooks can do 90% of the heavy lifting for you. But it only can tell you decisions you've made, not decisions you should be making. And those are the important pieces, is the ones that are forward thinking, because we can see what our money did, but we need to be able to tell our money what to do in the future. And so we need to really be thinking about being proactive as much as we possibly can, because that's going to help save us right now in taxes. But two, that's the way the world's going. And to stay competitive, we need to be looking forward and utilizing that data to help us make good decisions.
Agreed. And so because these proactive decisions are so important and they can mean so much to your business, are there any other pitfalls that you look at and say, all right, this is what you have to be proactive in right now as a priority for the future?
Yeah, just understanding your numbers and are huge. Like a lot of guys talk about, this is the cost of, this is what we charge to do paver sealing, or this is what we charge per square foot when we do a commercial job, right? Some of those people are just shooting from the hip. They have no idea what that really costs to do and what their profit is on it. They just go, yeah, it's a big number and this is what we charge to do our work. If you don't know what that costs you or have an understanding of that, you could be taking big jobs and not knowing you're losing money on it because you might have some other things that are very profitable, right? So knowing those types of numbers can be really, really important for helping you know, because sometimes the best job you take is the one you say no to, right? The customer wants it to be too cheap and you go, yeah, I think we can do it for that. But you don't understand that you have costs like depreciation and fuel and insurance and workman's comp that you're not factoring. You're just going, yeah, we need 100 gallons of SH and we need, 5 guys to do 10 hours of work or whatever. Yeah, it's a no-brainer. We'll make money on that. But you're not factoring in some of those other costs that you need to operate your business. So you might be taking bad jobs. So that's another pitfall I've seen where guys are going, yeah, I got this recurring job for $200 a month to do this little basic, at this commercial place. And it's like, well, you're pulling your $25,000 pressure washer, 10 miles to get there. And then it takes you two guys, 2 hours each to do this job. And it's like, you're not factoring in all of those other costs. You're just saying those guys cost me $20 an hour. And so I got 4 hours of work, so it's $80. I'm making $120 a month. It's like probably not accurate. You're probably losing money on a job like that. And so that's another pitfall that guys can run into really, really quickly.
Yeah, that makes sense. And it sprung a thought into my mind as well. As we've been talking about everyone, really, obviously it's generalities, but we've been talking a lot today about, all right, if this is what you've done, how do you set yourself up for the next year to be more optimal and maximize your tax situation? So where I want to go with this is just a quick question. What would you recommend to prioritize if someone's just starting out? I know this is probably a huge answer, and at the end of the answer is probably, all right, just call Drake and he'll help you out. But we do have a lot of people in the audience for this show that are just starting out and might not even be at the point where they're filing taxes because they're just starting out, and they need to know, hey, what's the best way to even incorporate? What's the best way to get rolling at the beginning?
Yeah. So when you're just starting out, open up an LLC. It's a no-brainer. It's the cheapest insurance policy you'll ever buy. Do not mix personal funds and business funds because that'll void your LLC, and it's like you should have never bought it. An LLC is there to provide you protection, but it is not a taxing entity. An LLC can be taxed 4 different ways. So an LLC is just for liability protection. Don't call it I'm taxed as an LLC because that doesn't mean anything. Then go set up a business checking account, maybe a business credit card if you want. It depends on how you need to finance stuff, but I would prefer not. And every business transaction runs through that business checking account. And if you need money personally, you make a transfer to your personal account. That's it. That's all you need to do. And then if you got questions, reach out to me, but your main focus and priority is getting sales and making money. Everything else is ancillary. You don't need the perfect, presentation. You need to go wash houses, seal patios, do flat work concrete, and make money, because I can't do anything with you if you don't make any money. I can prep your tax return, and that's it. And I'm not in the world to just prep tax returns. That's no fun for me. I get nothing out of that, and you'll get nothing out of that. Like I always tell everybody, I don't want to be your accountant where you come in March, you slide me your information. I say, come back in 2 weeks, we'll have it done. Slide to your tax return and say, see you next year. That's not who I'm trying to work with. This is proactive. This is advisory. This is information for you to use. Those are the type of people that I'm working with. So if you're brand new, you need to just go get sales and go focus on making money. You don't need an office admin right away. You need to be hustling and grinding to go make money, because I can't provide you any services, and neither can any other accountant, unless you're profitable and making money. Like, I'm not useful to you then. So go out and secure sales and go make money. That's the name of the game. And then everything else we can work with later. But if you're filing bankruptcy or not being able to eat, it's very tough for you to hire me and go, what can we do better to save on taxes? Like, you can't save on taxes when you don't make any money. There's no taxes to pay then.
So that's the priority.
That's the biggest thing is you need to just be out there hustling, taking jobs, getting work, getting Google reviews, but making sure you're separating when you are tracking those things. Put it all through a business checking account. When you do take money, that's not an expense. That's an owner draw or a distribution. Take that money to live off of, keep it bare bones, and grow your business, because that long term is the most important part. You don't need overhead costs. You need to go make money so that you can repeat the process over and over again, and then hire people and make more money and more money. That's the name of the game. And it's out there. It's 100% out there and open for you guys to go be able to do this. But don't get too far in front of your skis where you start to go, let's get cutesy and play business. We need to go make money.
Makes sense. And I totally get why that's a priority from your perspective.
Yep.
So
I don't make money unless you make money. So my goal is to help you make more money.
Yeah. And so from your perspective, Drake has a perfect perspective here for this next question. You deal with a lot of pressure washers and you see their financials. And so I'm wondering, do you have any perspective on what's working and what's not working for the pressure washers you see growing the fastest or growing the best or the most sustainable way? What do you see that's working from your perspective?
The guys that are really effective, probably in that under $20,000 a month sales side, are doing everything they can to get leads. They are knocking on every door in a neighborhood. They don't quit at 3 o'clock. They fill out their entire day, if they're not washing, with doing something to help them get jobs. And then they're also starting to look to hire. So they're finding somebody that can take over their position. They are documenting well what they are doing. So you're always training to replace yourself, right? So if you're the one guy out there washing houses right now, you're training somebody to be that technician. And then now you're learning to be the lead, right? So that means you're maybe making phone calls while they're walking the roof, doing a soft wash, or while they're going around the house doing something, or you are taking yourself a little bit away and focusing more on the advertising. Then after that guy grows up a little bit, you're starting to look at somebody that's maybe doing $20,000 to $40,000 a year. These guys are starting to spend a little bit of money on advertising. You're starting to see, maybe 3 to 10% of their sales is going to, paying somebody to help run Google ads, Facebook ads, and maybe just a market, somebody that's helping them with their Facebook side or creating some graphics. Typically, the smaller companies have fatter net profit margins, so they're probably doing somewhere around 40%. As you scale a little bit, they're probably cutting down to 25 when you're getting to that 20,000 to 50,000. They're probably in that 20 to 25% net profit margins. Now, the pitfall that comes for these guys is they either buy too expensive of equipment, and so that it's a big cost for them, or they're not managing cash correctly. because they're probably having bigger jobs where they might have more lag time in their payments. The guy that's doing under $20,000 a month either has one really big client that they do a lot for, or they're doing lots of individual house washes. Those people pay pretty much right on. When you start working with bigger commercial companies, they might have some lag time in payment where you're having to pay your guys, pay the loan on your equipment, pay your office manager, and now you still got to wait 30 days or sometimes longer for them to cut you a check. So they're running into a little bit of capital issues. The smaller guys, their issue is just not getting enough leads in the door. So it's that you have different problems as you scale up. If you're doing 50 plus, you probably have a number of trucks out on the road, and that's where you're starting to run into maintenance issues and hiring issues. When you're doing 50 plus, you're probably constantly hiring. You probably always have a job opening, and because this is a high turnover business, you're losing a lot of employees all the time. You're probably rehiring 50% of your staff a lot of years would be kind of what I've been seeing. And so now you're in more of a game of managing your people as opposed to managing a house wash. The business almost changes into more of a person management type business as opposed to how do you clean a driveway effectively. Those kind of go away as you start to do 50 plus a month. And then they have some of the problems that the kind of that middle tier does, but a lot less because they have good systems and people in place at that point.
Great answer. Absolutely. So that was a fantastic answer. So now you're making me want to ask, what from your perspective doesn't work? That if someone's doing now, they have to stop because you've just seen this tactic not work in other companies.
Yeah, there's a lot of new guys that are playing business. They're thinking it's cutesy to play business, but they're not understanding that they have sometimes tens of thousands of dollars tied up into it and only making $1,000 or $2,000 a week. Like, you need to be out there really getting after it and not going, oh, this vendor just called me and I owe them an invoice. Let me drive over there and pay it off real quick. That's not a priority right now. Your priority is marketing yourself like crazy, because right now you don't have any brand. There's nobody that knows who you are. They're buying from you. And so you're the one that needs to be out there constantly selling. I mean, that's most of what your day should be. The other thing I always think of too is they don't hire soon enough, right? If you're starting out or in your first or second year right now and you've never hired somebody and you're not hiring right now, and now you're going to be busy in May, guess what that means for your June? It means all of your May is spent doing all of the work that you sold when you were slow, and now your June sucks because you're not out there selling in May. So you got to always think of your pipeline as like 30 to 45 days out, and if you're not doing anything today, in 45 days, that pipeline is going to be dry. And so now you're trying to sell and go do all the washes yourself. It's pretty tough to do in just the amount of hours that you have. So that's one of the things is if you think you need to start hiring, you probably should have a month or two ago. You need to be constantly on it and building it, because we're here to build businesses. We're not here to own jobs. If you're here to own a job, that's fine. These problems aren't your problems. But if you're here to build an actual investment and a business, you need teams and systems in place to help accurately run that business. If you own shares in Coca-Cola, you don't go, well, I'm going to go into the factory today and fill some bottles. It's like, no, I expect a return from this investment because I gave them money to utilize inside of their company. You're doing the same thing. You're working in that company, but that company should also be kicking you a return back for the profit and hard work that you put in to build it.
Wow, absolutely. Well said. Thank you.
I could talk more, but again, this is, if you guys want to reach out and we can talk about your business in more specifics, but I'm passionate about business. I don't love debits and credits of accounting. I love business. So if you guys want to talk business, we can talk business all day.
Absolutely. And so, Drake, we're going to have you on for a third episode. Absolutely.
Love to.
What I'm thinking we do is let's see if we get some feedback from the audience. Guys, reach out to me, reach out to Drake, and let us know what you want to hear about when it comes to accounting and taxes and anything in Drake's wheelhouse. Yeah. So
I own multiple businesses, so if we want to just talk strategy from your business too, that's perfectly fine.
So
it doesn't have to just be debits and credits.
Yep. So could you reiterate once again the special offer you have for the audience, and then most importantly, how they can reach you.
Yep. Yeah. So guys, if any of this kind of rings true, and you're thinking, man, I do need to get some of this set up and going, the biggest thing that can really help you is getting accounting system in place and having monthly financials to go make decisions with. So our offer for you guys, anybody that's listening, is we will set up all of your QuickBooks and get it all reconciled through April if you sign on to our monthly accounting package. So reach out to me. You can reach me at my website, performancefinancialllc.com. You can email me, dvanthul@performancefinancialllc.com, or reach out to us on Facebook or Instagram at Performance Financial. We'd be happy to help you guys walk through some of this, and I'll post my name in the comments, or Jake will tag me when we post these to some different pages as well. So feel free to reach out to me on there as well, and love to help you guys walk through this. Typically what that process looks like, just to break it down, is we do a 30-minute discovery call with you. It's for free. We answer questions. We walk you through our process. Just make sure we're a good fit for each other. And I work with primarily in the contractor and service-based business. Work a ton with pressure washers. They're about 75% of my clientele. So I understand the industry. I've gone to events. I talk with these guys on a daily basis, and I do coaching for a lot of contractors and pressure washers as well. So I understand your industry, and that's why I'm so passionate about it, because I see the great opportunity that's sitting out there. But there's a need in there for good financial advice to really help you guys get to that next step. And that's what I'm really trying to help out with. So if you got questions, feel free to reach out.
Take him up on that offer. As you can tell, Drake is a fantastic resource. So take him up on that offer, and also can't wait to have you back, Drake. Thank you so much for joining us.
Appreciate it, Jake, man. This is always a good time, so I'd love to be back on.
Absolutely. Under Pressure would love to have you again. Again, thank you. Thank you very much for joining us. Thank you to the audience for joining us. Stay tuned for some fantastic guests coming up in the very near future. We have a great list of guests to bring you with all sorts of different specialties, and Drake will be added back on that list again. So thank you very much, and we'll see you next week.
If you haven't subscribed, go ahead and smash that subscribe button. And don't forget to hit the bell so you won't miss our next episode. This episode was produced by Jake Aronson. This has been a Pair Payments production.